Do you know why most traders lose money, even with strategies like supply and demand? It's not because the strategy doesn't work. It's because they don't know how to use it properly. In this video, I'm exposing the biggest mistakes traders make when trading these levels and how you can avoid them to start trading like a pro. But that's not all today. We'll also uncover the true power of daily, weekly, and monthly pivot levels, the most critical zones professional traders swear by. Let's dive in. Supply zones represent areas where sellers are likely to step in, and demand zones are where buyers take control. Looks simple, right? But the way most traders approach these levels is completely wrong. Combine that with the power of pivot levels calculated from previous price action, and you have a game-changing strategy. Always look for zones with significant price movements. These indicate where institutional players are active. Use higher timeframes like daily, weekly, and monthly to confirm strong zones. Example using the recent price action of the British pound versus US dollar currency pair. Let's look at the British pound from June 2024 to today, December 2024. During this period, British pound was predominantly in an uptrend most of the time. Price found support near the weekly and monthly pivot points before continuing higher. Alternatively, during short-term downtrends, these same pivot levels acted as resistance, capping the upside. For instance, in September 2024, British pound repeatedly bounced off the monthly pivot, confirming its role as a strong support level in the uptrend. However, when the trend reversed briefly in October, those same zones turned into resistance, providing excellent shorting opportunities. Why pivot levels are essential. Daily pivots give you the most reactive levels for intraday trades, where weekly pivots are best for swing trades and monthly pivots define the dominant trend. The secret? These levels align with institutional buying and selling zones. Mistake number 1. Traders misidentify supply and demand zones. A common rookie mistake is picking random highs and lows as supply and demand zones without considering the broader market structure or key pivot levels. Solution: to avoid this, always combine supply and demand zones with daily, weekly, and monthly pivot points. These pivots are calculated using price action from previous periods and often act as magnets for price, especially in trending markets. Pro tip: always use the previous days and week's highs and lows to identify potential supply and demand zones. These levels often align with major pivot points and are where the market is most likely to reverse. Institutional traders frequently use these zones to enter and exit positions, so following them can give you a significant edge. Mistake number 2. Treating pivots as static lines. Problem: traders expect price to stop exactly at a pivot level. Think of pivots as zones, not hard lines. They're areas where price may stall or reverse. Use supply and demand confirmation or candlestick patterns to validate these zones. How to use pivot levels effectively. Use the daily pivot as your guide. If price is above, focus on buy trades near the pivot or support levels. If below, look for sell trades near resistance. Weekly pivots confirm trends, while monthly pivots help set larger stop loss or take profit zones. Pair pivot levels with volume analysis or indicators like RSI to confirm momentum at these zones. Bonus tip: the pivot plus supply-demand combo. When a pivot level aligns with a major supply or demand zone, it signals high institutional interest. These areas often lead to the biggest moves in price. Most traders fail not because the market is against them, but because they don't know how to leverage the true power of supply and demand zones or pivots. By mastering these levels, combining them with higher timeframes, and aligning with institutional strategies, you can transform your trading game and gain a real edge in the market. If you found value in this, smash that like button, hit subscribe, and turn on notification for upcoming videos. Thanks for watching.